Go on gold. Okay, let's roll on gold this morning. Okay, the whole methodology states this. The first thing we do is I'm on the gold chart for some of you traders that are new to the methodology. The first thing we do is we got to find out the overall trend direction. We have our black market profile chart, and over here on our white J signal chart, we got market profile also. We got 3 different types of profile. If you look here, we have the solid green line, which is low value area, more volume based. These dotted lines right here, they're more price based. And then over here on the white chart, you've got your more developing profile, intraday profile. So the first thing you're going to do when you first log in the room, you got to establish the trend direction. We either trend or we chop. Typically in the market, you trend 3 days and you're in range or chop 2 days. Well, the easiest way to do that is look at this magenta moving average. We don't use moving averages for support and resistance. They don't work because they're lagging indicators, but they're great for trend direction. Here's your trend direction. Trend direction is down. If it's angled down, you want to short retracements. That's what we want to do, short retracements. How we do it is we have HVA, they're in red. You got volume profile up here, red solid line, price profile right here, the red dotted line. Volume LVA is down here, the solid line, and then you got price base is the dotted line. So what we want to do is we want to, if we're in a downtrend, we want to sell high value area. For your early morning traders, my system caught the high to the exact tick, my market profile. Caught it to the exact tick high. You let it come up into profile within 2 ticks of HVA if you're in a downtrend, and you let market delta pull you in with a negative market delta. But recently, for you traders that just logged in, I tell you traders don't log in later than 7:45 if you're trading the futures market. You nailed this exact one. It stopped perfectly right here. Break retest of low value area. What you want to do in a downtrend, we do not buy low value. Low value, we want to let it break. We want to let it retest. We want to sell the retracement. So we're going to let low value area break. It's called an ABC pattern or a 1, 2, 3 pattern short. It's been doing this for 31 years. You let it retest within 2 ticks. There it is, stopping right at the low value area. You look for negative market delta, and there is your trade setup. It's going on now, a $500 trade per 1 contract with a maximum risk of 130 bucks. Now, if I look at my pull-in right here on negative market delta came right here. Our negative market delta came right at the high on the retracement and get a negative market delta. If the second bar, let me clear things up because Mike had emailed me last night. Let me clear things up. It's the second bar that counts the most. Leave your stop in 2 ticks above the swing high. We've been doing this ever since I released market delta. You leave 2 ticks above the swing high, the second bar. If it closes green after you enter at the open of the bar, if it closes green, if you're going short, take a small loss. If not, you got yourself one hell of a trade. There you go. That's an M top. Look at this profit potential. Got as low as almost $600 per 1 contract, maximum risk 130 bucks. What we do, guys and gals, if the trend is down, we have 2 big sweet spots in the market right now. Sell the high of high value area. There's high value within 2 ticks. There's one spot, or let low value area break, retest, and my volume profile absolutely nailed it. My price profile nailed the high to the tick. My volume profile nailed this break retracement with negative market delta. Okay, negative market delta. All right, so that's how we trade it. Now, what happened is the market weakened even more with J signal over here. If you look at J signal, the best way to trade J signal for your early morning traders, very simple. We have high value, low value also over here. Here's your high value, red, low value, green, works on all markets. The best way to trade this, it happened on crude yesterday for that big giant explosion on crude. You can look at the video. There's your close below low value area. You do it just like the black charts. You let low value area break. You look for the first retracement. You get negative market delta. It nailed the high again. And there you go. This one was almost $1,000 trade, maximum risk 130 bucks. You got $1,000 trade, a 10-to-1 reward to risk on this guy. So over here, you're working on a $600 trade per one contract. This was a $1,000 trade potential per one contract. Now, check this out. Look at this one up here at the high, 54 all the way down to 42. That's over almost a $1,200 trade, maximum risk potential, right, with $130 risk. So you had a $1,300 trade potential, $1,200 trade potential, I'm sorry. You had your right here, you had a $1,000 trade potential, and now you just had a $600 trade potential. And they all coincided, every single one of them, with market profile setting the trade up and letting market delta pop you in the trade. Those are your three hot spots in gold this morning. You should have not taken the long on any of these trades. There's been no long setup, zero. Not even thinking about touching long trades. It's been a short side market according to my method. We sell retracements and downtrends. Market's in a downtrend. Sell HVA. Let LVA break, retest, look for negative market delta. Once you get in with negative market delta, if the next bar closes the opposite color, we take a small loss. If not, we stay in the trade, keep the stop 2 ticks above the swing high, and you got yourself a nice position to the downside. Okay, we just had recent Fibonacci dots here hit again for another additional setup. So we're looking at 4 back-to-back setups. There's another entry at 46. 1, 2, 3, 4 opportunities to the downside. It doesn't get better than that. All right. It's just huge, huge opportunity, high reward to risk in gold this morning. And what I tell you yesterday, I told you we're in a flat range market. Look for gold to break loose. Sure enough, I was exactly correct. She broke loose, and there she goes. You don't stay in chopper range too long in crude and gold. Once they break loose, I said the same thing yesterday in crude oil. I said we're in between high value, low value. Look for the break retest. Sure enough, we broke out of high value. First retracement, market explodes. Not very hard to trade these markets when you have knowledge on how to do these things. If we're in a downtrend, you sell high value. You never buy low value in a downtrend. You let it break, let it retest. Consequently, if you're below low value, we do not buy. We're not counter trend traders. Let all the novice traders get taken to the woodshed. If we're above high value, we do not sell. Okay? Just remember that. Below low value, we never buy. Above high value, we never sell.